Hi guys, and welcome to our weekly video. And today we're going to look at dollar index, pound USD and euro USD. Of course, I'm going to highlight some other assets that might be of interest as the week goes by, but I'll just give like a skeleton view of what I anticipate them to do. So it will be your duty now to break down the market structure of those other assets, and that should be Aussie dollar, euro pound, and pound NZD, which I've already posted on the channel. So first things first, we need to look at dollar index, right? So before I go to the COT numbers, right, just need to highlight a few things regarding dollar index. So last week we saw dollar trading to our ultimate target, which was right around the 90.50 zone. If you remember correctly, I mentioned that the ultimate for last week, ultimate goal for dollar was for it to reach 90.50, and that happened right to the pip. Yes, market traded right above, but that's bonus if you kept on holding that long trade. And then after that we saw a huge retracement to the downside back to our 89.89 level. Now what does that tell us in terms of the market structure? We couldn't break above 90.80, right? That's our level of interest to the upside. For us to particularly say the bulls might rally a bit to the upside, we need to see price breaking above 90.80, and we didn't get that. Price retraced back down to 89.89, which was almost close to our weekly open from last week. So we had a rally of 67 pips from last week, because we had our entry at 89.89, and then we had market rally all the way to our target 90.50. So the outlook from last week panned out perfectly. So now I think it's 4 or 3 in a row that we've been predicting the markets right to the pip. So it takes time, guys. It's not a case that you're gonna be watching these videos and you also be able to do the same. It takes time and chart practice to be able to focus, like, where is price likely going? Where does the market want to go? I've already modified my extend my institutional order flow that I have marked on the chart, and you can see today Monday's price action, right? Monday's price action on dollar, we have dropped down from 90.200, we have dropped down back to 89.89. and where is price likely heading to? Price is likely going to these sell stops down here, right? The ones that represents our internal liquidity range, right? So we've got sell stops here, and these sell stops are located right around 89.64, right? So without yet looking at the COT number, I'm expecting dollar to trade lower a bit during this week. I'm expecting a weaker dollar. For a sustained dollar rally, we need to trade above 90.200. That's when we should have targets around 90.50 again. But as it is right now, I foresee a dollar weakness heading back to 89.600, which will represent ideal scenarios for us to take what? Long trades. So now let's go to the COT number that's coming to the CFTC report. Come to our commitment of traders. Then I'm going to scroll down to my legacy reports. Legacy reports, I need to go under ICE futures markets, short format only. Right, and here I'm going to look for dollar index. Now, some people have come forward and told me that I think we should consider the non-commercials rather than the commercials. I think they've been following it. So you see, reading the COT chart does not have a magic pattern to it. If you decide you're going to follow what the non-commercials are doing, that is what you'd have decided, and you have to try and test it. Personally, I have tried and tested the commercials numbers, and I found out that they work in relation to my trading style, in relation to my trading strategy, right? So now we're going to look at the non-commercials for dollar index, and this is as of 1 June 2021. So I'm gonna copy my date there. So we need 1 June, and as of the 1st of June, the commercials, they are holding 30,212 long position, 31,212. You can see they've increased their long exposure as of June 1st. We didn't see a dollar rally today, take note. And then short positions, they are holding 27,249. Short positions, they're holding 27,249. So they've increased both sides of their holdings, right? For the short positions, they've increased by just above 3,000, and for the long positions, they've increased by about 4,000. Now coming to the commercials, which is the guys that I like to base my analysis on, long term, the commercials, they're holding 6,357. 6,357. They've added their long positions, and short positions, they're holding 12,191. They're holding 12,191. They've also increased both sides. Now when we look at these numbers here, the long percentage exposure, right, you can see that the commercials, they've actually increased their long exposure from 33% to 34%, and then their short exposure has been reduced from 66.62 to 65.73. Now when we look at the commercials have also increased their long exposure, right, from 52 to 53%. Now this is the total number of their positions, the ones they are holding, and overall from last week to this current week, they've increased their overall positions on long term. And short positions, they were holding 47.34. now they're holding just above 46.5%, meaning both these entities, whether it's the hedge funds, banks, or institutions, and the commercials, which is the corporations that are hedging against these guys here, they are all looking to get a strong dollar. But now the key question becomes like, from what levels do you have to anticipate that rally in dollar? Now, open interest on dollar is sitting at 48045. 48045. Now that's a big jump in open interest. Now, if that is much of a jump, right, open interest has increased. It is an indication that commercial traders are increasing their what? their net short positions, and you can see our net positions here. They've increased massively from 5.3 to 5.8. Now this signifies that when we come to the chart, we need to be in a position to define an area of discount where dollar is likely to trade to, right? An area of discount where dollar is likely to trade to before we start seeing support, right? Before we start seeing buyers coming back into dollar. Now, before I go any further, right? Before I go any further, I want to show you my weekly profiles regarding dollar, euro, and pound. Now, last week on our weekly charts, right? The closing of last week on dollar, we saw dollar distributing to the upside. That's a sign of weakness. We saw pound distributing to the downside. That's a sign of strength. We saw pound now not confirming with euro. Pound supposed to have the same price action from last week. Can you see we didn't get a lower low? This low is still intact, meaning the sell stops below here, they are still intact. So there was no distribution here, there was actually accumulation. So we saw pound accumulating to the upside. We saw distribution in euro. We saw distribution in dollar to the upside. That was a sign of weakness. So this week we could see a weaker dollar trading into discount, and we could see a strong euro trading into premium. Could see also pound trading into premium before we start looking for short positions. Now, coming back to dollar index. Coming back to dollar index, you can see dollar is still right in our monthly discount, right? Dollar is still in discount. Now, with that said, where do we anticipate dollar to trade to before it can start finding support? You see what we have in discount. We've got a bullish order block right there, right? Now, when we mark it, when you highlight that price action, that bullish order block, its 50% mean threshold is coming in right at 89.730, and that is also coincidentally the closing of our monthly bullish order block, which is the higher time frame that we are looking at. So when you highlight that on dollar, you need to be able to highlight that price point. So I'm going to use this clean chart here, 89.730. So the dotted line represents the price action that I'm anticipating on dollar. I'm expecting a weaker dollar into this level here before we start seeing strength coming back into dollar. Now, where's this strength coming from? Now remember the numbers that we captured on the COT report. That's the anticipation of the strength that I have in dollar index. So dollar index 89.89 and 89.73. Ideally, after price has cleared these sell stops, right? Ideally, we need to trade long after those sell stops have been cleared. The moment you see a price run through this level, that's your trigger to be hunting for long positions. Now, if you are in the group, I'll be updating you guys after I've seen the price action happening or after I've seen something different panning out. But this is what I'm expecting dollar to do in this week. Further weakness probably going into Tuesday, thereby creating the low of the week. before we see another move to the upside from 89.89 or 89.73. So this is my analysis regarding dollar index. So the 89.73, that is your most ideal scenario or your most preferably optimum entry for long trades. If you enter a long trade at 89.89, the risk you're associating that trade with is going to be very high, because you're going to have a huge stop loss, because you're going to need your stop loss to be way below 89.73 or 89.60. So yeah, I'm still bullish on dollar, though we should have a room for the market to trade to the downside, but long term wise, I'm bullish on dollar with my target set at 90.50 or 90.80. Now coming to EURUSD, right? Coming to EURUSD, now the opposite applies when we come to EURUSD. If I'm bullish on dollar, I'm going to be bearish on euro, but from which level now? Now that's the same price action from last week. I'm expecting dollar to, it might not test 1.22416. We might not see that number this week, but you can see we are in a higher time frame premium range. In this range here, I'm expecting euro to trade to the downside, but only after a bit of strength. Probably Tuesday or Wednesday, we're gonna see some strength coming into euro. As you can see, Monday we are already showing signs of market moving to the upside. So right around 1.22421, expect euro to find resistance around this range here before the market turns to the downside. So let me just do this quickly. Let me give you better pricing, like a rough guide. So we got 1.22421 and we have 1.22529. So now let's see what the COT number is telling us regarding the euro. That means we're going to now to the commodity, the Chicago Mercantile Exchange. We need the short format, right? Control F. We need euro. Now here's the euro futures only positions as of the 1st of January. Euro 1st of January. Now the non-commercials, they are holding 237,360 long exposure. 237,360. What have they done there? They've increased their long exposure. Then their short exposure is sitting in at 128,038. 128,038. What have they done there? They've taken profit, right? They've taken profit on their short exposure on euro. Now coming to the commercials, they are holding 384,998. 384,998. They've increased their long exposure. And then short exposure, you're looking at 568,512. 568,512. Now for the first time, right? For the first time, we have seen an increase for the first time in how many weeks? 1, 2, 3, 4, 5, 6, 7, 8 weeks. We have seen the commercials increasing their, they keep on increasing. They didn't reduce, they're increasing their short exposure. So for the past 8 weeks, 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks to be exact, they keep on increasing their short exposure on euro, right? They increased their long exposure from 381 to 384. That's about 3,000 positions. But their short exposure, they've increased from 561 to 568. That's about 7,000 increase. Now the non-commercials, they've reduced their short exposure by about 5,000, and they've increased their long exposure by 1,000. We can clearly see here the commercials, they've got a bigger advantage on the short side, meaning I'm expecting euro to be bearish, but only after some strength coming in, and that strength now is the one where we need to take note of the high of the week, because it's probably going to come in Tuesday or Wednesday during London open. Open interest on euro is sitting at 742.079. 742.079. Now open interest has jumped by about 4,000 positions. Let's see, yeah, just under 4,000, 3,941. That is not much of a jump on open interest. Now when we come to the chart, right, when we come to euro USD, the chart, we've got exactly the same price action, right, but opposite. You see, we've got our last up candle here, which is our clearly defined bearish order block, right? That's our clearly defined bearish order block. Okay, let me use my solid line there. Now you can clearly see the 50% mean threshold of that bearish order block is coming in at is coming in at 1.22300, right? So for euro USD, I'm expecting some strength getting into 1.22300 before market turns to the downside, right? That's what I'm expecting euro to do. But now we cannot ignore these two price points. These are our higher time frame price points. What lies above here, we've got external range liquidity of buy stops. Above here we've got buy stops located there. Above here we have internal range, it's inside the range. We've got internal range of buy stop liquidity. So expect euro to trade inside this range and trade lower, with the ultimate goal being this weekly bullish order block, right? It doesn't have to be difficult, guys. This is not rocket science. Yes, a lot of people out there, they make it look as if it's something very difficult, but it's not. You just need to make sure you understand the concept. Now remember 1.22300. Can you see on H4? I'm expecting euro to trade higher tomorrow, probably create a high of the week before we start seeing market turn to the downside. So I'm expecting in this range here, might be around 1.224 or 1.225, right? One of those. We need to be watching out for that price action for a reduction in momentum to the upside for us to trade lower. The moment we start seeing small bodied candles heading into those price points that I've mentioned, guys, that will be your trigger to short euro USD. And we've got a clearly defined bearish order block on H4 here. You can further break down that bearish order block if you are someone who's trading on H1 or 30-minute time frame. You can further break down that bearish order block. That means you want to reduce your risk exposure on the trade. So yeah, regarding euro USD, I'll be expecting price to trade into 1.22300 or 10-20 pips above for me to trade to the downside. Now coming to pound USD. Coming to pound USD, I'm expecting pound to also trade to the downside. Now before I go to the COT number, you can clearly see price is in premium range right now. It's in that range where we anticipate market to find resistance, right? We're expecting pound to find resistance, and we are trading inside our daily rejection block, bearish rejection block to be precise. So with that in mind, expect a low. Can you see me there? So this was buy side liquidity in the form of buy stops. Now this is external range, right? We had external range liquidity in the form of buy stops, right, above 42411 from last week, which was our entry point to the downside. Now those have been liquidated, they've been ran, the stops have been liquidated. But now the high that has been created, there's also a range of buy stops. But as I'm bearish on EURUSD, the only price action I would need to see above there is another spike to the upside and trade lower. But as of now, right, I don't expect price to trade above let me see what price point is this. Let me see what price point are we talking about here. What's the high? The high is at 1.4285. For the bearish outlook that I'm focusing on pound, I don't want to see price trading above that range, because it has already done what it needs to do. Yes, we've got SMT divergence on the weekly chart signifying pound accumulation to the upside, strength in pound, but we've got this bearish order block here, right? You see this bearish order block here inside our daily bearish rejection block, inside our daily rejection block. So you can see 1.4193. So basically we've got an institutional price point of so that's 1.4200, guys. That's the magic number on pound USD. 1.42. That's our magic number. Now I haven't looked at the numbers that came out to see how the COT report is helping me. Remember, the COT report is just a tool that you use to help you in your analysis. Already from the technical aspect view, from the technical analysis that I have here, 1.4200, 1.42194, these are my ideal areas for market to tend to the downside. These are the price points I'll be anticipating price to trade. You see these two highs here, they're too clean, right? They are way too clean. See these two. Let me just mark them out quickly. They are way too clean for my liking, such that it's an area of liquidity. And then we've got a fair value gap, right? We have a fair value gap in here, this range from this high to this low. Okay, let me just make sure that it's precise, right? This low to this high, we've got a liquidity void here. Remember now, this is H4, right? And we have a fair value gap. We've got a fair value gap inside that range. Now all this is on our daily rejection, bearish rejection block, or this structure that I'm marking, is inside our daily bearish rejection block. Now once we trade above, they've cleared the buy stops above these two equal highs. Now that's your trigger. That there is your initial trigger. Once price clears up here, it would definitely mean we would have created another high. We would have created a high probably of the week. Expect market to trade lower, right? Now let's just look at the COT number for pound. Let's look at the COT number for pound. Right, remember guys, I have to apologize for this. My analysis is going to be well detailed. That means the video might be too long for some. You see, the video might be too long, but this is me guiding the mentorship group, right, step by step, because I don't want to leave anything else on the table. So coming to pound futures only position as of 1st of June, non-commercials, they were holding 64,204. 64,204. They've slightly increased their long, slightly. That's basically just by 7 plus 4, 8 positions only. That's nothing. And then short positions, they're holding 40,079. 40,079. Now this is massive. Now you can see they've increased their short exposure by about what, 7,000, or just under 7,000. Now when we come to the commercials, they are holding 67,004 long position. 67,004. They've increased their long exposure by about 4,000. And then short positions, they're holding 110,204. 110,204. They've taken profit on their short exposure on pound USD. Last week they increased by 1,000. This week they've taken profits by about 3,000 positions. Now open interest is sitting at 174,502. 174,502. Now that's a jump of just about 5,000. Yeah, that's a big jump. So expect an expansion on pound USD, and the expansion that I'm anticipating on pound USD is to the downside. I'm expecting market to trade to the downside on pound USD, with my initial target set at 1.4100, or inside this short-term bullish order block. So initial target on pound USD is going to be on 1.40979. So that's 1.4100. So yeah, this is what I wanted to share with you guys on those three assets: dollar index, euro USD, and pound USD. If there's something that you didn't understand clearly, just send me a message in the group. This is for the mentorship group, guys. If there's something that you didn't understand, or something that you think you have missed or I have missed, just let me know in the group, and then we can discuss further from there. Now I wanted to also share with you pound, euro, pound, right? This pair, I'm expecting price to trade lower. You see, we had market on Friday showing us willingness to trade to the downside. We had market showing us willingness to trade just to below 0.855. There's sell stops there, and we've got a weekly bullish order block right here. So expect the sell stops below to be traded through, and the target set at 0.85230. So that's the target to the downside on Euro GBP, with your entries, you see, your short entries inside this bearish order block. You can see we had a fair value gap here which was nicely closed, and then market rallied. We still have another open fair value gap here, the liquidity void. So this high, let me just mark out that structure so that you don't get confused. So we've got 4 there, right? And this candle here, this is a nice fair value gap where if market does trade to the upside, expect resistance there with your target right here. So this is what I'm anticipating Euro GBP to trade. And then we've got Aussie dollar, right? Aussie dollar price is now approaching our monthly bullish order block. The price point to take note from there is the 0.77919, so 0.7900. That's your trigger price point when it comes to shorting Aussie dollar. Expect Aussie dollar to trade inside this monthly bearish order block. If there's still momentum to the upside, take note of this bearish order block here. This will be your optimum entry for short trades on Aussie dollar. This bearish order block here, this will be your ideal entry for shorts. Yes, you can open a trade the moment the price reaches 0.77900 or 0.7800. You can open a short trade there, but you just have to make sure your stop loss is well above 79220. So my focus on Aussie dollar, we are going to see weakness coming into Aussie dollar. As long as there's strength showing in dollar index, expect Aussie dollar to find resistance around 0.7950 or 0.7800 before it tends to the downside. So this week I didn't cover gold, I didn't cover USD JPY. There's a reason for that. Now I'm going to notify the mentorship group for this reason why I didn't cover these two assets. Now there's another asset, final one, the third one, that I would like to share with you guys. I've already posted a video of it on the YouTube channel. It was a free video, and if you followed through, right, if you followed through, Friday offered you 130 pips on pound NZD. I did a top-down market structure breakdown on pound NZD, and I'm still expecting pound NZD to trade lower, right into this price point here, 1.9500. That is the target for short positions. Even if you enter from current level, that should be your target. You're looking at about 90 pips and your stop above 1.97800. So pound NZD, short-term buyers, we're looking for shorts. We're looking for market to trade to the downside. If you remember correctly, or even if you haven't watched that video, guys, you can just go back and watch it so that you see how I defined all this structure from monthly, weekly, all the way down to the daily time frame. So yeah, that's pretty much about it that I wanted to share with you guys this week. And for those that are not yet in the mentorship, unfortunately you are going to be watching this video Wednesday afternoon or Thursday morning, because for now it's going to be uploaded and shared instantly with the mentorship group. So if you want to get this video earlier, just join the mentorship and we'll gladly assist you. And if you haven't liked or subscribed to the channel, just do so. click the subscription button and make sure you've got the bell icon selected so that you get notifications whenever I release a video or something like what I'm gonna do with USD-JPY. I'm gonna do a proper structure breakdown and I'm gonna upload that for the public so that people get a glimpse of how we analyze the market in the group and how I'm teaching the other guys to do so. So with that, guys, I wish you good luck and happy trading. Thank you.